So Tom and Dave are part of this, talking about a couple consolidation boxes and sell stops below. Take a look over here. The NASDAQ is this chart, and underneath it is sell stops and the prediction that this is going to happen before this is going to happen. So when we rewind it, we talk about, you could see the yellow box I throw on there, where right there, showing people below 80, look out. Let me bring this over. And then at the same time, I go over and talk about, look at the ES. So the ES had these lows of 37, 38, and they were 80 even in the NASDAQ. So that correlation created at the same time, bam, a breakout. Look over here to the downside through 80. The same time you had a breakout right through here in the ES. This is the ES, this is the NASDAQ. Now, let's magnify it. Look, do you want to see more longs or more shorts? If you're looking to get short, you want to see more longs. You don't want to see more shorts. You don't want the competition. So if you're anticipating this breakout, you're going to want to see the green light up. Remember, you're anticipating a breakout, and then you see the green light up. I'll play in real time. Right now, here's the 37.38. Right below there could be some longs saying holy SHIT, and then all of a sudden those longs light up. And we start to get below these prior longs at puke. But once as soon as you see these longs light up, our laser gets a little longer, and then you get this raw totals down and here start to flip, and you got more longs, more shorts. You see my arrow in real time point to this. Downside was the right side. You don't have to be a rocket scientist. In fact, you don't want to be a rocket scientist when trying to get good and stay good in trading. Try to get consistent and stay consistent. In this trading, you want to be good at being wrong, and you want the simplicity to give you direction. And even if you look for 5 points, 10 points, 20 points in an ES move, that's not what you're looking for right off the bat. You're just trying to get good locations to minimize the heat, to get some, winners out of the gate. So then you could play with the balance of a position size that you grew, but you grow your position. You don't start with multiple contracts in your trading. You build up to a certain size and build into scaling to be able to take advantage of good locations that are right for a point or two. And then if you catch it, it's like that pitch you caught right off the sweet spot. And instead of a soft line drive for a base hit, you drove it into the gap, right? Or you hit it over the guy's head. Now you got a double or triple. You're not trying to hit home runs. You're just trying to hit good pitches, foul tip good pitches till you find the pitch you can handle. And that's the same with trading. You got to let things line up. Here you got two markets that were showing you some downside if they got through certain levels at the same time, 80 in the NASDAQ, as Tom and Dave mentioned, and lined up with 37.5, 38 even here in the ES. And then you see the longs come in here. That was back here. Let me back it up. You see the longs that had come in here right there and really set the stage for lookout below. And then it happens, and it doesn't feel like a good guess, doesn't feel like you're lucky, because you're using the right stuff to make these predictions instead of some magic Fibonacci circle, Bollinger Band, moving average cross with stochastics above 75 and relative strength below 30.